Good morning, everybody. Yeah, Friday. Welcome to today's edition, Friday morning, daily market commentary. Hope everybody had a great day yesterday. I hope you had a great day because it wasn't a great trading day. It was more of one of those days that I hope it was a great day. As we kind of chopped in between some major zones yesterday, and when we were talking about the best trading opportunities yesterday, we started the day in our live trade room with, you don't have to do this every day. And yes, it was one of those days where it definitely made sense to step away. This morning we are down 3 in the S&P, up 16 in the NASDAQ. So, it's just been a very, very choppy sideways week. I don't know if anybody else has experienced that, but I know that I certainly did yesterday and for most of this week. So as we go through today's session, if you guys have any questions, please put them in the chat window attached to the screen. And it was it's time for us to go ahead and get rolling. Yeah, I agree, Liz. It was just one of those days where the market just jumped in between, feeling seasick. It's a really good way to put it, John. It was not it was definitely some choppy seas, but choppy seas make for good sailing. I put that out there yesterday in a tweet, and it's just this is the kind of stuff that is not the easiest of markets to trade. Now, we did have a couple of moves throughout the day, but the ones that we never came even close in our S&P to either one of our levels that we had identified as our best probability as far as the zone. So let me go ahead and dive into it this morning. By the way, if you're new to the channel, click the subscribe button, hit the notification bell, all that fun stuff. If you're a regular returning viewer, then hey, appreciate it. Thanks for coming and joining us. Click the little thumbs up icon. It means a lot, and I appreciate you all coming in. All right. So first here is the S&P, and starting with the S&P, we have a 4-hour chart. Now, the 4-hour chart is telling us very clearly what? What's a 4-hour chart telling us? Nothing. It's telling us the same thing that it's told us since the announcement of the vaccine. That's really, if we go and think about it, the announcement of the vaccine was here. And the 4-hour chart, ever since that announcement of the vaccine, we got the announcement, we immediately pulled back and retraced it. And now we've just been in this range ever since. That's really all that's happening, is that we've seen that range ever since has been very, very sideways with minimal movement, giving us, once again, not a lot of phenomenal trade and opportunities. I mean, we had a pretty good opportunity yesterday in the ES that we based a bit in front of the level, and we never came really to that zone. And so now I've still got this area up here. I'm actually going to remove this one and just lean on the upper level up here. I still think that's probably the better of the two. The reason I'm removing this one is because if I take this one, my minimum reward to risk would be here. And I'm already sitting there at about a 1-to-1 reward to risk with basing, right? So I'm going to leave that go. Now, down below here, we might have an opportunity right in there if we pull back into there as a smaller go. That's formed right there around the London Open. So anytime we're formed around the London Open, it's going to be a better level and a better time of the day, and that's 35.63 by 35.59. Other than that, not a whole lot to add here in the ES. Now, what you can talk about today is maybe selling options against the SPX. Right now, I don't have any of these to talk about as of yet, but there could be some one-day options that we can sell in the SPX once the market opens, and that's really what this market is good for, selling those one-day options, one-day positions. The NQ, so looking at our NASDAQ trade. So yesterday, we had looked in the NASDAQ, and we had said, well, if you're really aggressive and want to try something, you can do on a candle-to-candle opportunity here. You can get short after this candle with a doji. And we did get an entry, and then it immediately popped up above that level. I mean, it just didn't do a thing. Well, it did at the very least come to our 15-minute entry and then got back to its opposing zone. So, there was a little bit of a move here for those of you that were quick on the draw, taking a 1-to-1, but you knew that this line had to be the target point, and so it didn't really give you a strong reward to risk in that position. Now, the other thing to consider is that in this trade, your stop technically has to go way the heck up here. And so, if you got into this thing 1, 2, 3, 4, 5, 6 candles later, it basically had you at a small loss or down around the break-even mark. It wasn't a great trade by any stretch of the imagination. So it was one of those days where it was just kind of, as I use the phrase, tough sledding. It was very tough sledding. Now, the market did wind up crawling up throughout the day, which I was a little bit surprised with. I anticipated us coming down throughout most of the day based on this price action that we had through here. So I was looking at this price action where we had this move down and then a pull back up, and then we had a move down and then a pull back up. And when we were looking at it, it moved down and then we had pulled back up. So I was looking at it yesterday, looking at all of these moves down, thinking, okay, I think we'll probably come down today. Well, the market didn't listen to that. It just didn't do as it was told, tended to be a little bit misbehaving, and went up. And that's okay. You're going to have those days. And I did not catch most of this ride yesterday. Absolutely did not. Because once we had gotten through that level, then we are still underneath some of this zone. So I stayed away at that point, and I'm not sure what most of you guys did yesterday on that trade, but I'd much rather stay away when I've got no clear direction than try to guess where I think it's going to go. Now, we're still looking above 1258 for a breakout trade, provided I get basing inside this little gray box. We need tight basing to the level, which I don't have as of yet. We're just not basing tight to the level. And I'm always cautious of those breakouts when they occur at exactly the market open, right? I want breakouts within an hour, 2 hours of the market open. But to break out at exactly the moment of market open is sometimes going to be a little bit less on the probability side. So when I look at this, I'm looking I'd love to get a breakout in the next, after the markets open up a little bit and you take a run. Now, remember that it is Friday. And so being that it is Friday, and we're heading into a holiday week. So it's Friday heading into a holiday week. So we might see a little bit of sluggishness towards the afternoon. Just know that if you decide you want to hold something over the weekend, then it's going to be a fairly lengthy hold over that weekend position. Yeah, and options expiration is also part of it. So if you want to go a bit lower for a reversal trade on a 15-minute chart, I don't really have anything that I like. I mean, it's just kind of wicky. Nothing sticks out as, this is a great level, and so I'm not going to add anything to my repertoire, as they say. The Russell. So the Russell yesterday, we had talked about the fact that we were having a bit of slowing momentum, and that if price comes up to here, we could have a decent little short. Well, we came close to that area yesterday in the afternoon time, and then we were unable to get all the way into the zone. Now, it looks as though we could be basing a bit close to that level. So I'm going to remove it at this point because it feels like we're basing a bit close to the level with a fair amount of sideways chop heading into that region. Our 4-hour trend, not very strong, right? I don't have a whole lot here to lean on the 4-hour trend. You do have a little level. I mean, it's super tiny right here. Holiday weeks are normally bullish, Dennis. I would agree with that in general, which is part of the reason why I want to remove some of these areas of supply up above me. And so when I'm looking at this, you got a little area here, a little wick over wick area here where we could see a bit of a reversal. So that's a small zone, 1773, 1770, that might be worth taking a flyer on a pullback into that region, looking for a quick 2-to-1 reward to risk. And then the Dow Jones. The Dow, actually, from all of our levels yesterday, was the one that behaved the best as we came into our supply level and got a pretty good little sell-off. And now we're chopping inside of that level. So whenever we see that happen, right, price hits our level, moves away, second time into the level, we start chopping. What does that normally set up? somebody tell me in the chat window what that normally sets up, because we think about it from terms of order flow. There were sell orders left when price moved away from this level. We used up some of those sell orders, and now we're basing inside of that area. Yeah, that usually sets up a breakout trade, right? It usually sets up some sort of an upside breakout above that level. And if we break out to the upside, your stop would go below the last pivot in that position. Now, there is also that little wick over wick right here in this market, as well as the origin of the move down here. So we could still pull back into one of these areas before coming up, and we still need the basing, right? I still need the tight basing before the level before I get the clean breakout, but that one is in play. All right. Any questions on our equity markets? Any questions on our equity markets today? All right, let me type this one in here real quick. All right, next. Let's move to commodities. Yeah, it's also the Globex high. That is a good point above that breakout. 1745 level, still good for Russell. Well, down here, absolutely, John. I think it's still fine. I think it's an okay level. It's a confirmation entry, but I think that 1745 is still a good level on the Russell if price comes back to there. I will say, though, that it's a confirmation because by the time we get there, we would be in a confirmed downtrend, right? Lower swing lows, lower swing highs. So while it's still good, it's a little less good than it was. All right. Energies and metals. So starting with crude oil. So we looked at crude yesterday, and we had talked about, hey, we might get a bit of a breakdown below here. We came close to the area, never got the basing, okay? And so I still would wait for that, the basing inside the level. So Jasmine asked a good question. When you say tight basing in front of the zone, may I ask how many candles normally I should expect on what time frame? So the time frame, Jasmine, that you would need in there, it is either a 60-minute or a 15-minute chart, and it can be either one, 60 or 15. But the key is that your stop is placed outside the pivot on that particular time frame, and your basing needs to be immediately close to the level. And I'm okay if it's 2 or 3 candles. Like, it doesn't need to be 9 candles worth of basing. Matter of fact, 2 or 3 candles is probably pretty ideal. So that's where you'd want to look is to see, okay, it's that 2 to 3 candle area where I would look. And then Jasmine, you can go, if you go to the website, go to Advanced Price Study underneath Learn OnDemand Courses. By the way, for those of you guys that are not familiar, once you're a member, you get access to all of these courses for the same membership. Underneath Advanced Price Study, Jasmine, you have basing defined, breakout trades, and reversals. There's a video there that you can watch, and then there's another video just on breakout trading. So both of those are available for you. All right. So that's the one I like in crude oil. You know, we might even have a breakout above this high, but it's not set up yet at all, and it doesn't set up well from here. So I don't really have a reason to go for just a breakout above that high because I don't have 3 touches. I don't know that I would want to consider this wick right here a touch with all this noise up here above it. So that's really the only one that I would go with right now on the CL is this breakdown below 4130, provided that we get the basing. Now, gold. So we looked yesterday at gold and said, hey, you might have a swing trade opportunity in gold on a breakdown below here because our 4-hour chart, our 4-hour trend is definitely telling us, hey, listen, the better probability is that price is going to break down. And then we just nicked below the level. We just wicked below the level and then came back up above it and got above our prior pivot right here. Now, it still hasn't done really anything It's the level I think is still a good breakout level. It just have gone nowhere. So this would be a false breakout, right? I sometimes will say, well, that's not a false breakout because it's not a breakout. No, that one fit all of our criteria. That one ticked off all the boxes. We had 1, 2, and we broke out on the third touch. And we were basing close to the level, not immediately before, but close enough, and it was in the direction of the predominant trend, and we just wicked out of it and then came back up. I mean, it was just, and I forget who sings the song, but Mama told me there'd be days like this, right? My mom, is that Bob Seger? I don't know. I don't remember who. I think it was my mama told me there'd be days like this. That was one of those trades where it was just frustrating. Nothing I could do about it. Market went against us. C'est la vie. So now I look above, right? And usually when that happens, it does set up another trade. When I get stopped out, I look at it as an opportunity to set up another trade. And so I'm looking for this one up here. 1878 by 1881 would be the next area for a decent reversal. But overall, in the 4-hour grand scheme of things, it's not all that pretty either way, right? I mean, it's definitely telling me that shorts are the way to go, but I've got a lot of buying pressure on all these lower wicks. So it could be a good day to go pick the turkey out that you're going to cook next week with just you and your immediate family. Don't you let me catch you with more than 4 people in your house, okay? Don't you do it. Don't do it. All right, that's just me being a little bit of a jerk. Being a what's the word? A smart aleck. All right. Next would be nat gas. So nat gas, once again, Mama told me there'd be days like this. I said, okay, well, we got a nice little short opportunity here in nat gas, and price came into my level. But did it come into my level? How about no? Just a bit outside. I mean, just missed the quality entry. And then price moved away from the level about the way we expected it to move away from the level. So unfortunately, didn't get us a fill. But by barely missing the entry, what happens to this level? What kind of a zone does it become? By barely missing the entry, we switch it to a confirmation zone, right? Well, in switching to a confirmation zone, the next time price came up into the level, and we've now pierced through the level, thus not giving us a quality entry. Okay, so that entry to me is gone. Now, looking at this on a 4-hour, my trend direction has not changed. I'm still net bearish. I am still not bullish just because we've had a few hours of up move on the 1-hour chart. I'm still overall still net bearish. And we're putting in a bit of a tweezer top at the moment. So there's still a possibility that we can come down out of here and give us a nice downward move. If you do, I'd want to wait till you get below probably this line here. You could go below this wick of this candlestick. But, you know, that if that tweezer top holds, that would be a really decent potential entry to take the next move down. If we get above this wick during this 7 a.m. candle, then certainly that tweezer top would not hold and it would not set up for the entry. Copper. Copper, see, as we moved up in this one, we had looked at this yesterday and said, okay, we may have a breakdown in copper, and then like the rest of the day yesterday, as all of our metals just went up like this throughout the day, it did the same thing. I thought this was going to go like the way of gold. Now, this was a bit premature because the downtrend hadn't begun yet, but we talked about the fact that if you do get in below here, then you're going to have an opportunity for a short. Well, we got the break, we got the poke below, but then on the retest, the market came up and just went right above it. Very quick move above that level. And this was a case where we saw supply and demand flip. So old supply became new demand, price rallied up, and we got a very strong move away. All right, so now that sets me up for future trades. That's the way I look at those kind of moves, is that they set me up for better opportunities in future trades going forward. My eye immediately goes to this. This is the first one that my brain goes to. Not the best time of day, but a very clean level right before a nice strong move away. The other area is the most obvious level, which is the origin of this move up. Both of those levels become pretty good areas of demand. Okay. So anybody got any questions on those levels, let me know. Move this down here a bit. Make sure I'm zoomed in so everyone can see it all right. And then I'm going to do a quick a grid share. All right, let me put this in the all right. Next, let's go take a look at our agriculturals. We'll take a look at the ags. And looking at the ags, we had a decent move up yesterday in soy, and that's continuing its bullish move. Thought we might get a little bit of a pullback out of this zone if we got below 1611. Did not get that pullback, and we were not willing to get short on anything up above. So, unfortunately, it didn't get us a great entry. You know, the temptation was to look for a short right in here, but the big picture was telling us shorts are probably not the way to go, right? So on the 4-hour, looking at this, we're still looking now for a pullback to a quality area of demand or a basing area for a breakout. In reality, you could have taken a little breakout above this region here or even the retest, but that's the overnights, right? You got to be awake and in front of it. So if you're not John or Nick or Jose or one of you that are trading in the international scene, it's going to be a little bit tougher. I do think that this is a pretty good area. If we get that pullback, that's just that's going to be a fairly deep pullback in order for us to jump in and take advantage of that position. So I'm not sure if you guys would want to go in with that one because that one's a little bit further out from current price. All right. When I'm looking at some of these positions, what I want to be able to see is where are the best reversal trades, but also where are the best breakout trades, right? The best breakout trades, the best reversal trades, they're going to be the ones that are going to give you nice, strong, long-running movements. Well, corn is now setting up for exactly that. And why is it setting up for that? Well, because of the weekly chart. When I look at the weekly chart, you've got room to run up to here. You have 1 touch, 2 touch, and now we're basing in front of the 3rd touch. Now, yesterday we looked and said, you know, if you wanted to try something a bit more aggressive, you can give this 1-hour supply area a go, but that's way more aggressive because we're still in an uptrend, right? And all of these positions that are a bit more aggressive, you've got to be comfortable getting in on that, right? Well, it didn't give you the entry. As a matter of fact, told you that I should probably not try to force this one. And it popped above it, which is okay. Small loss. Now we're setting up for a decent breakout in this position. I really like this one for a breakout. This I think is a pretty good setup where you've got, I think, one of your better opportunities. So above 428. Looking at wheat gave us the little breakdown as we did get basing right here at the level inside of our gray box. Matter of fact, it's hanging in our gray box. So 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere. Matter of fact, 7, 8, 9, 10, 11 candles later, it had gone nowhere. It wouldn't have stopped you out until about the 12th. So plenty of time to get out for the break-even trade. And now there's really nothing for me to have on this. There's really nothing for me to look at. Because when I go to the 4-hour, that's just garbage. Garbage, as they would say up in Beantown. It's a big pile of garbage. Kind of like the Patriots are playing this year. Oh, I'm sorry. I couldn't resist. I'm not a Patriot fan. All right. And then last is bean oil. So looking at soybean oil. Pull back into this area here, 38.67 by 38.51. You're right, John. These type of breakout trades do inherently occur at fair price value areas because remember what markets exist to do. Markets exist primarily to facilitate trade. That's what they're born to do, right? Is to facilitate trade. And if that market is going to facilitate trade, it's going to need to go to areas where there's the most number of unfilled orders, and that's what it's looking for. So it's a great point, John. All right, so let me share this grid. All right. Next, let's go to bonds and currencies. All right. Next on bonds and currencies. So yesterday we had on our 1 hour chart this area in here that we were looking for a potential on a breakout. We did actually get a little bit of a break above. 1, 2, 3, 4, 5, 6 candles later, we actually had a decent move. It broke above and then pulled back, but not below the pivot. So in doing so, you may have taken a little profit off of that position. If you panicked and got out too early, remember 1, 2, 3, 4, 5. It was the 6th candle was up here. So you definitely did get the move, but we didn't get huge follow through. And that tells me that my momentum is stalling. Well, why is my momentum stalling? It's stalling because we're coming up against some supply, right? It's stalling because we're coming up against some supply, which was the origin of a very strong drop, very big move away. So when I look at this on the 1 hour time period, what I see is this little unbalanced wick over wick here below a pivot high, but we're basing in front of that level and we came almost to it. So I need to remove it at this point. I don't know that that level is going to hold quite as effectively. And when I look at my areas of reversal for demand, nothing in here is overly clean. Now, our upward trend is still continuing, right? We do still have a continuation of this upward trend. It's just not a super strong, super powerful upward trend, as it's losing a bit of steam. And you can see that if I throw my momentum indicator on here, we'll see that my steam is kind of being lost a bit. It's just hovering around that 0 line. So with that, I'm just, once again, not going to add anything to the chart, unfortunately. Great British Pound, or excuse me, the 30-year Treasury bond price broke out above our breakout line, hit our area of supply, and then started to make a move away. It's rare for me to say that our best performing market yesterday was the bond. But it was. Our best opportunity actually happened in the bond market as it worked perfectly, breaking out above the breakout line, hitting the area of supply, and then catching a little bit of a pullback. So now I need to remove both of those lines because they're both no longer going to be valid. So that area of supply, which was here, is now, we're going to look up to this next area as our next best level here in the 30-year. And once again, a bit of a rising trend line. Now, remembering that trend lines are a bit subjective, right? Because I can draw my trend line like this. I can draw it like this, right? So trend lines are always going to be a bit subjective. But I don't need to worry about the subjectivity of the trend line to know that the trend is going up and it's losing a little bit of its momentum, right? So I'm not going to add anything super close to this level because I think there's a chance we could pull back, but I don't know that I trust any of these demand areas to stop price from pulling back, okay? Looking at the euro, so in our euro position, we had our 1 hour chart. Price came screaming into our 1 hour level and then screamed right through our 1 hour level. Once again, Mama told me that there'd be days like this. We just broke right through that level, and now we're just chopping sideways. Much to what we'd spoken about, the fact that our currency markets were sideways, and we were dealing with a very tough trading market, and that's what we had yesterday. Euro and the Canadian dollar, both of them. If I just kind of look at both of them were kind of just chopping around. So when I'm looking at something like this, I'm just not adding anything to this trade. Just not. I'm going to ride off into the sunset over the weekend. I mean, I'll look to see if we base in front of here, but in reality, I'm going to ride off into the sunset over the weekend on the euro. Just not going with it. Canadian dollar, I think, is actually a bit better for a breakout above here. Now, remember that our Canadian dollar earlier in the week, we had a pretty good trade. And so the Canadian dollar has been one of my better performers of the week, aside from our Monday day, which was a good day, as it's actually been performing much better. Lee, something may have been. I will tell you, I don't pay attention to the news. All I do is trade the chart. So I'd have to go back in and take a look. All right, and then the last one would be the other markets. So looking first at the New Zealand dollar, we talked about this being a confirmation short. Now, price came to our confirmation short and poked above the level just a little bit, and telling you probably shouldn't get into this trade. If you didn't listen and you got into the trade anyway, you're in right here. 1, 2, 3, 4, 5, 6 candles later, you either are A, stopped out, although your stop should probably have been above this wick, above this candlestick right here, or B, closing the position out anyway. Now, we did wind up getting a little move away from there, but it wasn't so great that you should have felt bad about the trade. In reality, you did technically pop above your zone before giving you the quality entry. So those of you that trade this one, I know there's a lot of you that trade the New Zealand dollar. This would be where we would remove. Let's see. Cheng says, can I add your chart room? I'm not sure what you mean by that, CCY Cheng. When you're saying you add our chart room, I don't know what you mean by that. You have to expand a little bit. So looking at the New Zealand, now, by the way, we're still bullish in this thing. When I go to the 4-hour, my trend is still very much to the upside. We're still very much more on the bullish side of things. We did look to see if there was going to be a breakdown here. Never got it. So now let's see what the smaller time frame brings us for an entry. You got a decent little level right here, which I think that would be a decent entry. It's a decent little pivot, a little bit of a retest to this area here. But that, I think, is probably going to be an okay level. Okay is, now, by the way, when I say it's an okay level, remember this. Anybody ever read Good to Great by Jim Collins? Phenomenal book, Good to Great by Jim Collins. He says, okay is the enemy of good, and good is the enemy of great. This is an okay level, right? So being that it's an okay level, it's not a great level. That's for dang sure. So that's kind of why I would do to that. Great British Pound. So the Great British Pound, we didn't have any breakouts or any reversals or anything in our trade library yesterday, and so nothing came close to our levels. And so on this one, I'm going to identify a potential breakout above these highs if we get quality basing on a pullback to this little itty-bitty wick over wick. You might have a little go at that wick over wick. That's a very small, very tight window. But those are sometimes the ones that work out the best. Japanese yen didn't come to our level yesterday either, as we came close to the potential breakdown, but didn't touch it. Actually, that makes that potential breakdown that much better. And that was from Thursday. We left that line in. Technically, you may get a breakout above here, but I don't know how much quality room to roam you have. So I don't know that I would set anything up on that one. And then the Aussie, we did get a trade into the Aussie later in the day. We got a decent move away. Entry candle 1, 2, 3, 4, 5, 6 candles later. We hadn't basically gone anywhere. And then right at the opening of the Australian market, we saw a little bit of a move up and a pullback. And so I'm going to look to say that's one of those trades where the 6-candle rule kept us out of something that would have lost us money, got us out earlier. But on the 15-minute, I don't have a reason to get back in, right? I just don't have a clear reversal to get back in, even though it looks like we're going to continue on the upward momentum and the upward trajectory. So wait for a basing pattern to show up on that, or even better, don't force a trade today, right? Don't force the trade today. So I'm going to copy this one as well into the grid. Now, by the way, yesterday I started a YouTube live where I was going over the FANG stocks, and I was really testing a new live streaming platform, and the test crashed and burned. It wound up being a 2-minute live stream because the testing the testing of the new live stream software crashed and burned. So I apologize about that. I will maybe try to get one of these out later today, although I think I'm going to cover these Sunday night. I'm going to do the options trading session on Sunday evening. So, typically Corey does the Sunday night options, but I'm going to be doing it this week. And so I will definitely cover all of these in the Sunday night options room. I know a lot of you trade these 6 stocks and you look at them pretty regularly. I'm actually looking forward to doing some of that. Yeah, Liz, I figure I'm not going to do it on the daily market commentary. I'm not going to test something like that on the DMC, but the only way to test it is to go live. And so I went live and it crashed and burned, and hopefully I can get it figured out. What I'm really trying to do is to be able to simulcast my live stream to multiple locations. So I was using a third party to do that, and the third party didn't really feel like partying. So, but Sunday night I will be going over our options trades for the week. Those of you that are trading options, please, on our Sunday night live trade room, bring some options ideas and some options thoughts. If you are not trading options, please learn more about them. It's one of the best asset classes that you will ever trade. If you don't know much about what we do, go to tradersarmy.com, use promo code TRADER60, and we would love to see you become a member and join up and see what it is that we do. Get 60% off your first month. I mean, if we can help you to make an extra $150 a month, then it'll pay for itself. I mean, that's really what it comes down to, is how can we help you get 3 S&P points a month. So, all right, everybody. Well, that's all I have for today. Hey, Vince, happy Friday, man. All right, everybody. I will see you all soon. I appreciate you for joining me. I'll talk to you soon.